Welcome to the Sourcing Industry Landscape podcast, hosted by Dawn Tura, CEO and President of SIG.
So folks, we are getting together today on this podcast to talk about third-party risk management and governance organizations. And with me today, I have two amazing speakers. One is coming more from the technology standpoint, and one is a world-class practitioner. So Jay and Michele, I would like you to introduce yourself. So Jay, tell me about who you are, your company, and why are you with us today?
Yeah, thanks, Dawn. So my name is Jay. I'm the founder and CEO of ENGAIZ. Our company is focused on helping enterprises mitigate third-party vendor risk by adopting a framework that we call it as the art and science of engagement, enabled by technology. So we have been in this for a little over a year, and right now we are, our platform is launched, and we have been piloting with a few customers.
Good. And Michele, can you tell everyone how incredible you are?
Well, I don't know about incredible, but I have a lot of fun. Thanks, Dawn. My name's Michele Wesseling, and I head up the third-party management office for TD Securities. TD Securities is the capital markets arm of TD Bank. And so my background in procurement is a number of years, which I won't get into, but I have both direct and indirect experience. So it's been interesting at a financial institution. How much different that is from the days when I used to buy power tools. So I have a lot of fun these days, that's for sure.
But Michele, so I'm going to start with you. So when we're recording this, folks, for those of you who are listening, it's February of 2021. We just came through this weird 2020. But Michele, I know the global pandemic has pushed a lot of companies to shift what they're calling their new normal or temporary normal. And that includes working from home, which I know is a big shift for you, and then relooking at your organization's business continuity plans and third-party contracts. So as head of third-party risk management for a leading financial institution, what is top of mind for 2021 for you?
2021, aside from keeping the team motivated and engaged while they continue to work from this on again, off again, lockdown mode from home, and then the whole transition back to the office. That's one aspect of it. But when it comes to third-party risk, it's really ongoing monitoring that is the primary focus. So the pandemic caught us a little off guard, and we were reevaluating what we consider to be our business significant services from vendors. Quite frankly, we never factored the human factor into it. We were so focused on other risks that we didn't look at what services were primarily dependent on human beings to deliver to us as an organization. So we shored up a business significant plan that catered directly to those vendors. And we've been doing some ongoing monitoring ever since to the health of their workforce. But now with 2021, we're starting to shift back to not just monitoring that, but monitoring overall. So I would say the big focus is on ongoing monitoring and what that program looks like and what's the next big risk. What are your thoughts, Jay? What are you seeing?
So it's so interesting, Michele, you mentioned about the ongoing monitoring, right? So one of the things that we have seen is most organizations have figured out, what we call it as the point-in-time assessments, right? Point-in-time risk assessments. And most organizations have mastered it. Either they use, Excel sheets or tool-based. But when it comes to continuous monitoring, that's where I think, as you rightly said, the pandemic has caught off guard many organizations, and it was a big stress test on a lot of these, organizations. So what we have been doing is, and we have also done a lot of research on this continuous risk monitoring. And one of the things that we have been pushing is this thing called as internal and external risk events, right? So you have various external events, could be like a cybersecurity breach, or any of the regulatory changes. It can be financial health that was significant during the pandemic, and adverse media, reputational risk. All of those I would put it in the external events. But when it comes to internal events, those would be things like your performance SLAs, right? SLAs being missed out, contractual compliance, and then with your vendor as part of your regular cadence, regular governance, you tend to have a lot of piled up issues that are not resolved or open for quite a lot in a long time. So these are things like, these are the internal events. So, what we need to do is a good job in kind of regularly tracking these events, kind of monitoring these events, analyzing these events, and then triggering notifications, alert mechanism, and that should eventually lead to a readjustment of your residual risk of your vendors. So once it readjusts the residual risk of your vendors, then it can put the vendor in a watch list, right? So that is the technology element that we have put together in our platform, and some of the companies are beginning to take a look at that.
Interesting. So what a good time to be in a risk technology company.
Yep.
I mean, it's incredible, and I'm sure it's been evolving. So I'd like to get back to that in a minute. But Michele, if we go back to the early pandemic, what were some of the challenges that you faced in the early pandemic? And then how do you prepare yourselves for the future? Because the one thing that I keep hearing, and I think we have to believe, is that there's going to be another global event. Most of us never saw a pandemic as something that would happen, and it was once every 100 years. But now they're saying that there will be future pandemics. The world's gotten so small, or future global events. So what did you face in the beginning, and what do you think you've learned for the future?
Yeah, well, it's interesting you say that, Dawn, because I actually think disruption is the new normal. I really do. I mean, in the capital markets business, we call them black swan events, and there's been so many just in 2020 alone. When you look at the amount of disruption that occurred last year, that it's almost like it's going to just continue to happen, and it's trying to anticipate what it is. The interesting thing for me when I look at it is when 9/11 happened, it made us very singularly focused on risk. Right. And on business continuity in general. Like, we were literally, focused on one thing and one thing only. And then the pandemic hit, and we all realized that our own BCM plans weren't prepared for that. As you said, they were prepared for something entirely different. So when I start to think about, what should we be looking at as we move forward, I dare to dream. Like, we had an internal meeting not too long ago where we started to talk about what could potentially be next. We focus a lot on cyber. Let's face it. Cybersecurity is we focus on that a lot. Target proved to us there's a reason to do that. And then you start to think about, well, what else? And for example, one of the things right now that I lose a little sleep over is climate change and geographical concentration. When you start to think about how many of your vendors are located in the same geography, and if that is on the eastern seaboard, and then you start to look at the hurricanes of late, and then you start to wonder, wow, do I need to plan for that and a potential outage based on that? So I think we can't, I say dare to dream, and very tongue in cheek, but we almost have to think about every different aspect of risk, and then think about that from a third party perspective and the implications that it could pose and the disruptions that it could cause. So I don't think we can limit ourselves anymore.
Well, and I think, Jay, I think your company probably relies on the fact that it's not one and done, that this is the only risk event and then we're done.
Yeah, that's true, right? It's always evolving, right? New risks are always evolving. And going back to what Michelle just mentioned, right? So she touched upon concentration risk, and that is also another event that we kind of, track within the platform. Now, one comment I would make is when it comes to risk, we always go back to cybersecurity, privacy, regulatory, all of those key aspects. But the other soft aspect that we don't tend to focus much is how can we strengthen relationship with our third parties, right? So the strengthening, by strengthening relationship with your third parties, you are not going to be the only one worried about risk or mitigating risk. You're basically partnering with your vendor partner, right? Your third party, to ensure that you jointly mitigate risk. And that's something I think more and more organizations should begin to adopt. So it's not the onus on mitigating risk. It's just not falling only on the buying side of the organization, right? It equally benefits the sell side as well.
But that's bringing suppliers really, really close and sort of opening the kimono on both sides. Michelle, is that something that your organization is doing?
I'm a big advocate of that. A big advocate. I believe in the we, not the you and the me. It's my favorite line. I think I stole it from SIG. I will just give you a plug there because I'm pretty sure I did. But when I think about vendor relationships overall, whether they're traditional or non-traditional, whether they're tech or they're non-tech, I'm a big advocate of do more business with less and make more strategic partnerships. So when you look at classifying your vendors and you look at, who's in your leverage bucket and who's in your bottleneck bucket, how do you bring those folks into being strategic partners? Because I think the more transparent you are between your organizations and the more collaborative you are and the more you work for the we, the better the overall relationship is. And one of the things that I'm also an advocate of that we look a lot at, particularly in TD, is cultural fit. So we talk a lot about our culture, and then we look for vendors that align with that culture. Because when you're culturally aligned, your two organizations, it makes it really easy.
Yeah, so you brought up something, and I'm going to be a little bit, I'm going to not make it political or anything like that, but you brought up climate awareness, and whether you want to call it global warming or climate change or climate awareness, that means that you're following the science. So I could see how you would have trouble partnering with someone who doesn't believe in the science of climate change and how it might impact their organization. And to me, that would be a huge cultural fit that would not work well for me personally as an organization.
Yeah, there are so many other things too, like diversity and inclusion.
Yes.
That is a big one. Like culturally, we are really, really focused on that. So it makes it so much easier when we partner with a firm that also is in the same mindset, right? So those things just to me are table stakes. And then transparency and the way you even just collaborate, and even the way you negotiate. Do you negotiate with a similar mindset or frame of mind? Those are all things that are really important to me, and so, as well the company I work for.
Well, no, and I think that is absolutely important, because if we're going to do more business with fewer suppliers, we want to make sure that we're more aligned. But then, Jay, I have to ask you, does that create more risk by minimizing our supply base? Or do you also agree that if the closer we can become with fewer suppliers, we'll have more insight into future risks? How does ENGAIZ stand with that concept?
So our philosophy is, strengthen relationship with third parties, right? and going by in our company's name, Engage, right? It basically stands for engagement, right? We believe in a strong engagement with third parties. And this whole concept of engaging with your partners, engaging with your suppliers, engaging with your customers, right? So this term engagement is a very powerful one, right? And that's why we thought that okay, Engage is going to be the name of our company, and what we stand for, and how our philosophy and how we apply that philosophy with anything that we do, be it product development, or be it talking to our customers or partners or suppliers, right? So we are a heavy proponent of relationship and strengthening the engagement.
I like that. So Michele, I'm going to go back to you then. So in your opinion, and I will say, Jay, you mentioned Excel spreadsheets as an option some people use. I don't think you can do third-party risk without a technology platform. That's my personal take on it. It's too big, it's too diverse, it's too many spreadsheets. So Michele, what do you think organizations should do to ensure that they're monitoring all of their third parties appropriately?
Well, you need to have a program, and you need to have technology, obviously, but you need to have a program as well that fits your organization's risk appetite. So when you start to think about that, every industry has a different risk appetite, and then every firm has their own risk appetite. So you really have to look at it and say, what is important to us? Because if you treat every relationship the same, you'll either over monitor or you'll under, or somewhere in the middle. But you really have to look at it and take a risk-based approach, and look at significance, operational impact, the things that you want to have your hands on. And we have engagements, let's face it, that if we were to do without them, people would notice, but would they be able to still continue to operate? Absolutely, yes. And then there are those table stakes that if they go down for even an hour, there's a loss of revenue, or you're not aligned to your regulatory requirements. You've got to really monitor those and make sure that they're operating well, and the health of the company that provides them is in good shape. All of those aspects are in place. So to me, the program, the technology is the enabler, but it's the actual what does your program look like? What are the aspects of your program that you want to have in place? For example, how often do you monitor your high risk or your high impact? You can have low risk and high impact.
Right.
And you need to think about that as well. So it's not one dimensional. It's a bit of a Rubik's Cube, if you will. And having all the colors aligned on that Rubik's Cube, so you know exactly what you're doing and when you're doing it. And the technology is the key enabler to make it efficient and easy for folks to do. Because you're right, if you're doing it on Excel spreadsheets, you're going to need an army, and you're probably still going to miss stuff. Whereas if you've got the right technology in place and you've thought through the program, and the technology is set up to enable your objectives, that's just a win-win. And then at the end of the day, it just becomes fond recollections of work well done.
I like that. Fond recollections of work well done. I wish we could all look back and say that was last week and the week before. But, so to both of you, and maybe Jay, you go first, everybody's talking about digital transformation. And we do know that, especially because of the pandemic, so much, and so many people working from home, that a lot of the day-to-day grunt work needed to get automated. And that was part of our digital journey. I think we just sped it up a little bit because of the pandemic. But the more we go through this transformative journey and digitize, the more dependence on third-party vendors we are than we were before. So Jay, do you see that this is something that's going to increase over time, or is constantly on the increase? as we do rely on more and more vendors on work that we used to do ourselves?
Yeah, so with digital transformation happening, right? We think that this is going to increase, right? This dependence on third parties are always going to increase. And earlier, when we were talking about third parties and vendor involvement, we were talking about more of the traditional mature third parties. Now with all this emerging tech, you have to deal with startups, right? And startups bring in innovation, but along with innovation, they also bring risk. So, so you're going to, if your organization wants to innovate, you have no other go. You have to deal with the big vendors as well as the the smaller startups, and that ecosystem is also going to go up. So, so in essence, this whole thing is going to only increase, and organizations need to have a better way of handling risk. So in short, they have to elevate the game, right, when it comes to TPRM program.
Okay, so but Michele, you are responsible within your company for running a third-party management group. So how critical do you think the governance program is to help creating these win-win outcome-driven partnerships?
I think it's crucial, and I think everybody should care. I think right from the business who's using the service should care, the third party should care, the office, my team, procurement and third party risk management should care. It should be top of mind for everyone, should top of mind for the executives. To me, the program itself, how you onboard, and to your point, Jay, about, we have the whole emerging technology with fintechs, and I got to tell you, some of the stuff that I see coming up, leveraging new technology and the innovation and the innovative thinking on how to do things differently with less people or faster because people are augmented. I feel like every time I'm sitting down with a new company to talk about their offering and someone we haven't dealt with before, all that's going through my mind is, first of all, how do I put a price tag on this? And then secondly, how do I figure out what the inherent risk is under this? Because it's different than it was before. Yeah. So when I say everybody should care, the business that I work with, they know what they do. So they have to help me understand the risk of innovation, the risk that vendor is bringing to the table. And then on top of that, the executive should care, because at the end of the day, reputational damage is reputational damage. And then my team just has to measure it all after. So I find that the learning is daily. You're constantly learning new things and new ways to automate your business, but then you got to find that balancing act in all of it. So that's my thoughts on it's everybody's game right now.
Yeah. And Jay, how do you feel about that?
So just touching on what Michele just mentioned, right? So when you're talking about startups, just want to make a point here. Startups would require a different scale or different stick to measure. So you cannot do this whole criticality and inherent risk assessment that you would apply to the bigger vendors. So there has to be a different yardstick for startups. And obviously, yes, you have to see how you can balance the value that these startups bring with against the risk. And quite often, most of these startups are backed by venture arms or any of the other similar accelerators that kind of de-risk, right? So as long as you have something of that nature, companies are willing to work with startups, right? And having said that, even now, every large bank, they have their own venture arm, right? They have their innovation that is specifically, built and designed to work with these startups. So that's where I believe organizations are heading, and that's a good way to kind of bring these startups that organizations believe that they can invest in, kind of de-risk in the whole process, right? Of getting that value from that stream.
Yeah, and
Yeah,
it's
it goes
funny,
right-
there used to be the early adopters, the people who would be out there ahead of everyone else and taking the risk. And then we had the laggards, the one who say, I'm going to wait and see, and if it works out well for you, maybe I'll jump in. I don't think you have that luxury anymore, do you, Michele? The wait and
You
see.
You can't just be a laggard. I mean, if you do that, you end up missing the party. It's like showing up after everybody's on their way out the door. But at the same time, you've got to, I take it right back to your risk culture within your organization. So you've got to always have a check and balance in place that you're not selling the farm based on a startup. But I think, it's interesting. There's so many different approaches and so many different theories. And whether you want to be first, whether you want to be somewhere in the middle, but I definitely think you don't have the luxury to be last. Not anymore.
I agree. So Jai, we're just about coming up on time. Do you have any parting comments for everybody?
Well, I just want to, leave this behind for organizations to think about, right? Organizations can no longer treat risk separately. So they would have to adopt an integrated governance relationship and risk management approach, right? And that's the only way to deal with the future risks that are still evolving, that we still don't even know what is coming. Yeah.
Absolutely. And Michele, how about you?
I agree with Jai. Risk is from the time you think about, I need this new service, right through until the time you terminate it. And you better be refreshing it. You can't think that what you did when you onboarded a vendor and a service is static until the point where you terminate, because it is not. Risk is not static. If 2020 didn't teach us anything, it surely taught us that.
That's right. And we're going to have more and more risk events coming faster and faster is also what I'm hearing. So if you don't get your organization geared up now, you're already running behind. So folks, I'm going to tell you, you could not find two better leaders, Jai from a technology perspective, Michele from someone who lives it and breathes it. These are folks that are your go-to, but I think we heard it loud and clear. Without a third-party risk management and governance organization, you already are behind the 8 ball and you're only going to fall further behind. So Michele and Jai, I want to thank you for your time. It's always enjoyable. And Michele, for all the risk that you deal with, you continually smile and put an optimistic view forward. So thank you for your leadership. And Jai, thank you for always keeping everybody thinking about risk. You're not a sky is falling. You are the sky is going to fall. It's just, are we prepared or not? So I really enjoy both of you so much.
Yeah, thanks, Dawn.
Thank you,
Thanks,
Dawn.
Michele.
Thank you, folks.
Thank you.
And with that, I hope you reach out and keep in contact with both of our guest speakers today. We will include their contact information at the end of this podcast, and I hope you join us for our podcast very soon. So thank you.
Thank you for listening. Subscribe to the Sourcing Industry Landscape podcast through iTunes or your favorite podcast app. Want to nominate someone for an interview? Email us at info@sig.org.